Okay, guys, guess what this black candle is right here on this chart? Well, that is actually November 12th. If you go to 30 Market Moves YouTube channel, it is on November 12th where I posted a video saying this is the last bounce. As a matter of fact, I've called November 12th as the last bounce before market collapse. So how did we see it here again at 30 market moves before this sequence of red candles happens again? You can probably review some of the videos I posted over the weekend, but right now, the question to ask, of course, is what's on everyone's mind is it time to buy the dip? I mean, it looks like the market suffered long enough. Hey, can the NVIDIA earnings tomorrow turn the sides from bear to bulls again? Can we get a nice, big, brutal bounce? And the answer is we can get a small bounce here, guys. But the greatest catalyst for the market is not going to be the NVIDIA report to earnings and reaction to NVIDIA earnings report. It's going to be the BTC ratio. And as most of you would associate BTC with Bitcoin, by the way, congratulations to all of you who set up a coin call account using the referral link underneath all of our 13 Market Moves videos. If you haven't yet, you should, because you missed like the drop from 107 to 89K overnight yesterday. Guys, that drop gets you paid. I mean, with options. Now, most of the traders are fucking retarded still, like dinosaurs trading futures. But the real money is in the options, guys. So if you haven't set up your account with CoinCall, I mean, you're missing the big plays. I mean, that's that simple. So this drop right here is an equivalent to a 70x trade, depending on strikes, depending on expirations. So don't let this sort of move fucking miss you again. Not talking about all the three tops that we nailed here. But get back to the subject. The main subject of this video is the BTC ratio. Okay, BTC ratio has nothing to do with Bitcoin, okay? But it has everything to do with the direction of the bond market and ultimately the direction of Bitcoin. So what is the BTC ratio, guys? BTC ratio, let me write this out here. 1 second. BTC is a bid to cover, okay? Bid to cover ratio is what we're talking about, not Bitcoin. And bid to cover ratio is something that is utilized as a metric during bond auctions. The reason I'm talking to you about this today on November 18th, because tomorrow on the 19th of November 2025, there is a 20-year bond auction for 20-year basically United States government bonds, which is going to be taking place at 1 p.m. So those are the numbers you need to know: 19, 20, and 1. Okay. In order to elaborate what a BTC ratio is for some of you that may not be familiar with bonds or bond markets, basically think of your house as an example. So let's say you want to sell your house for $1 million. Okay. And you have 9 buyers show up, and each one of them is willing to give you $1 million for it. Okay, so that would be a bid to cover ratio of 9 to 1. You have 9 buyers all wanting to pay $1 million for your house. So basically you have about $9 million worth of money wanting to buy your house at that price. So chances are there's a really good chance basically you're going to sell it for $1 million if 9 buyers show up with about $1 million offer. Now, think of this now. If you only have, instead of 9 buyers, you only have 1 buyer that shows up with $1 million potential offer. And I mean, there is a chance that, hey, that buyer may walk away. That buyer may say, well, hey, I mean, actually, $1 million, now let's do like 950, you know. So there's a chance you may actually have to sell $1 million property for $950. And so the same thing is with the bond auctions. With a 20-year bond auction tomorrow on the 19th, they're going to try to get rid of $18 billion worth of, approximately $18 billion of United States government debt, which is basically trash. But people are still buying trash, and they've been doing it for years. And so chances of an auction completely failing tomorrow is not great. But what we want to look at is the historic ratio of a bid to cover on these auctions. On a 20-year, normally you're looking at a bid to cover of 2.5, okay? And I would say tomorrow we actually have a chance of a bid to cover ratio to get real close to 2. And possibly if bid to cover ratio tomorrow drops under 2, which we will know the results of that anywhere from 1 p.m. Eastern time, anywhere between 1 and 1:15, okay, we will know the results of that auction. And even though the probability is very low, I think based on the conditions on the markets and the moves and the charts, which I'm about to present you a couple of charts on some bonds and bond yields, okay, there is a probability that the bid to cover ratio on bonds is going to drop below 2 tomorrow at 1 o'clock. So that's actually going to take place before NVIDIA reports earnings around 4:30 or 4:15. So the market could very much be in a falling knife mode at 1 o'clock, way prior to the NVIDIA earnings report. And if NVIDIA is going to sell off ahead of the earnings report, then it's not necessarily a prudent idea to short it going into the report, because again, it's all about the context of trading something. Trading the earnings report is about looking at the context. Okay, it's not always about looking at the report, what's in the report. Okay, so if NVIDIA actually sells off after the bond auction severely into the report, you have one strategy. If it actually bounces into the report, you have another strategy, and oftentimes be in the opposite direction. So, but the point is, this is a critical part of the market, which is going to be taking place at 1 p.m., way before the catalyst that everybody is watching tomorrow is going to play out. And I would say in order to get the NVIDIA trade correctly, you would need to be paying close attention to this correctly. And honestly, the way NVIDIA options are priced, there's no possible fucking way for you to make 20x or even a 10x on NVIDIA. But we do have a trade that could go as much as 50x if you properly utilize this information that I'm giving you here. Now, most of you are not going to know what underlying you would have to trade. Most of you are not going to know what expiration or what strike. So the point is, okay, you need to click the link below, sign up to trade with a coach, get in touch with your coach if you trade with one in the past, and don't miss this easy fucking trade. Now, let's glance at some other charts. So basically, I talked about bonds for a little bit, but what people don't realize about the current market of crypto market, right, a lot of institutions are greatly overinvested in Bitcoin on leverage, utilizing preferred shares, zero coupon bonds, all kinds of garbage that they have created over the last 2 years just to be able to buy this, okay? And so I'm saying that there's a great probability they're going to be heading out for the exit. And since now, basically, I've posted a couple of videos showing you how crypto market is poisoned with bonds. So it's no longer Bitcoin as we know it. It is Bitcoin poisoned with United States government bonds. And if bonds begin to fail tomorrow at 1 p.m., and they will if BTC ratio drops below 2.0, then that also means you're going to have a severe hit in Bitcoin. Now, this is a very highly contradictory statement because most of the crypto idiots out there believe that if bonds fail, that somehow miraculously Bitcoin is going to go to 200,000, 300,000, $1 million. Well, this is purely idiotic because crypto is now backed by United States government bonds. So how the fuck do you expect bonds to fail and crypto go up at the same time? It's got zero fucking probability of happening. So what I'm here telling you basically is if the auction goes soft tomorrow, crypto is going to drop, not go higher. Now, let's look at the charts of the actual bonds and bond yields, which, you know, guys, they have inverse correlation. So let's go ahead, type hopefully you're doing this with me as we're going for these charts. $UST 20Y is the ticker for United States 20-year Treasury yield. Now, this is not the bond. We're talking about yields, which go higher. Yields go higher when bonds drop. And look at this setup. You have a convenient pattern that most of the time we talk about the head and shoulders. In this particular case, you have the inverse head and shoulders formation, which tells you that yields are going higher. Now, some of you are going to think, well, how the fuck can yields go higher because Federal Reserve is cutting rates? And that's a subject for a whole different podcast or setup. I mean, guys, we're going to talk about it separately, but just understand there's been 3 or 4 times in the history where Federal Reserve's been cutting rates and yields have actually gone up. Okay, there's multiple conditions for that. We don't have time for them in this video, but just understand, yes, Federal Reserve can cut rates and bond yields as a result could actually go fucking higher. So, and that's what this chart is telling us, that yields are about to move fucking higher, not lower. And if you're not sure about it, then let's go ahead and plug in the 30-year. And you're going to see an identical pattern here. So it doesn't matter on long-term bonds. In this particular case, bonds are going to drop and yields are going to go higher. So that when we're looking at the yield chart for the 20-year and 30-year bonds, we have an inverse head and shoulder formation, which is a bullish formation telling us that yields are going to go higher. Now, the reverse of that would be to look at the TLT. Okay, and TLT is telling us that it's got, whoa, surprise, surprise, a fucking head and shoulder. Like, look at this. So here's your shoulder. Here's your head formation. And the head formation, this is like the key fucking characteristic of getting the head and shoulder formation correctly, is when the top is formed, which in this case is kind of like a double top, you want to see a dry out in the volume while the head formation of the head and shoulders is formed, which is exactly what we have here. So at the highest prices, the volume drops off. Not many people want to buy it at these levels on any strong volume. So basically, the head formation is formed on fumes in volume, and then you have some selling on much higher volume. So now we have built out the other shoulder of the head and shoulder formation, and the next move is severely lower. How severe? Well, if the bond bid to cover ratio drops tomorrow under 2, we're going to see bonds somewhere in the neighborhood of 82, 83. Not necessarily tomorrow, but within a few trading days, which would be huge, okay, because this chart only displays 6 months. But if we go 9 months, remember when the April lows were hit, I mean, this is exactly where we were in April, about 83, when, I mean, bonds were collapsing. And the reason why it was such a concern, because what Federal Reserve was talking about, softer policy, everybody was ready for some rate cuts. And, bonds were fucking collapsing. They went like, this is a huge move for the bond market to go from this level to this level. I mean, in just never look at a drop from the perspective of the size of the drop, but rather the size of the drop in relation to the number of days that it takes to make the drop. So it's always the size of the drop in relation to the time frame. And here you got 1, 2, 3, 4, 5, 6. Last time a bond market had this sort of move in terms of percentages was in the bond market crash in 1980. Okay, so this doesn't look like much on the chart, but this is when They had a secret meeting with the Fed. Trump and the Fed got together and they were like, oh shit, how are we going to save the bond market? So what I'm saying is, in just a matter of a few trading sessions, you can go for this head and shoulder formation to hidden April lows on bonds. And I'm also telling you that if that was to take place, then crypto market would absolutely collapse and the rest of the fucking stock market would absolutely collapse. Now, over the weekend, I recorded a video, damn it, talking about the levels on the SPX. For those of you that missed it, I'm here to tell you that, I mean, this week we could be at 6,300. The following week we could be at fucking 5,800. And in the next 30 days, we could easily be hitting these levels that were set in April, okay? And nobody's fucking ready for it. People are thinking, oh, Bitcoin 80K is like, oh my God, what if we fall there? Bitcoin is going to 35K, okay? People don't fucking get it. They don't understand it, guys. So be fucking ready. Trade this wild market and pay attention to tomorrow 1 p.m. And if you want to know how to put together this 50x trade based on the information I just provided, get in touch with your coach. Let's fucking roll. 13 market moves.